So let's start with the cost of risk. So you're bringing down the cost of risk, things moving in the right direction there. Give us a sense of what's moving and how quickly in terms of your thinking.
Good morning from Vienna. Yeah, the risk costs have been coming down significantly following the pandemic shock in 2020. The rebound of the economies we are operating in Central Eastern Europe has been even stronger than we optimistically expected. And that is, of course, also reflected in a very benign risk environment, supporting our excellent operating results and delivering a very good net profit for this quarter. I think that's exactly the situation.
What can you tell us about the broad macro picture that you're operating in, Stefan? In terms of the Central and Eastern European story, of course, the rebound has been pretty strong. We've seen a rising rates environment. The loan book has been expanding previously. So tell us how the macro picture is playing into your business.
Yes, the CE economies have been resilient and should continue to rebound in 2021 and 2022. The GDP growth across the countries, the GDP growth rates for 2021 are nowadays expected to be between 3.7 and 6.9% respectively, with the typical leaders, the likes of Czech Republic, Romania and Hungary leading the pack. And we definitely expect this to contribute to the further conversion of CE countries. Therefore, overall, we'll expect an outperforming CE economic development compared to Western and average Europe.
And let me ask you about your M&A plans then, if that's the growth backdrop. You previously talked about being interested in certain spare bank assets in Europe and commerce bank assets in Hungary, for example. Where are you looking, Stefan, for M&A opportunities at this point?
I think generally speaking, we are very interested to be in an active role in the consolidation, in particular domestically in the countries where we are already operating with a strong franchise. Currently, yes, there are some opportunities popping up in Hungary. You named one of them. I'm sure there will be opportunities in some of the other countries, namely in our strong countries, Czech Republic and Slovakia, which will be discussed in the near future. However, it's too early to talk about concrete names. In general, we have always been saying that in the rebound after the pandemic, or at least in hopefully towards the end of the pandemic, there will be some consolidation and some M&A activity, and this is exactly what we are seeing nowadays.
How do you expect loan loss to provisions to develop, Stefan, into the second half of this year? Some government support measures in the economies you operate in will fall away in the second half. I wonder whether that leaves customers, businesses or individuals more vulnerable. How would you expect that the provisioning story to develop?
We have now adjusted our guidance to the market from formerly less than 65 basis points to less than 30 basis points. And let's be honest. Should the environment and should the momentum keep up, then the 30 will be really just a cap, and we might be even tending a little bit lower. Of course, and we should not ignore that. There are still risks around. We do not know how the Delta variant will really play out, how vaccination, which has been really doing, we have been seeing a very good momentum in vaccination for a while now. This is slowing down, also a typical pattern. This includes some dangers. Still, overall, we are optimistic that also the second half of the year will be pretty good on risk, because we expect less than 3% NPLs for the full year, something that no one would have imagined, honestly speaking, throughout 2020. And with all of that, we will be going very optimistically also into 2022 overall.
OK, so that's a sort of optimistic picture then when it comes to, and a very comforting picture perhaps, when it comes to non-performing loans and provisions to do with that. Where does that leave you on a capital side then, and on your ability to pay dividends? You've updated on your dividend thinking. We've had the ECB, of course, removing caps on dividends. How is that influencing what you want to pay out? Because they want to see dividends paid, but they don't want to see banks going crazy on that front.
Absolutely right. We are very happy, and we also expected that the ECB will lift this ban. I think it's exactly the right time to go back to something like normal course of business, and that's exactly what we are doing as well. We have a very strong capital generation, and we have been announcing this morning going back to our progressive dividend policy, meaning we want to grow step by step the payout, and we want to reward our investors. And this is exactly what we have been announcing this morning. 160 is the plan for €1.60 per share is the plan for the year 2021, and the formerly reserved catch-up dividend of €1 for the fourth quarter. Going forward, it's always extremely important for us to have a strong capital base in order to finance our activity and our growth in the business. But in the same moment, it's completely clear for us that we want to deliver good capital returns to our investors. So that's the combination on which we build our business model on.